or no questions. Was the Silicon Valley Bank failure a result of a liquidity issue?
I'm sorry.
Was Silicon Valley Bank failure a result of the liquidity issue?
Among other things, yes.
Signature Bank failure, the result of a liquidity issue?
Yes, I mean, that's not, there's also a lot of very bad management decisions being made here.
But liquidity. First Republic, was that a failure result of a liquidity issue also?
Among other things, yeah. I mean, I wouldn't say just liquidity.
Well, all right. Were any of them a failure of having too low capital levels?
So let's go to Silicon Valley Bank. You know, the issue that triggered the run initially was the presence of significant losses in their securities portfolio.
Yes.
And that is that is a capital issue.
So they had too low a capital, or the requirements. So what
they weren't required to, as you know, they weren't required to take that into account in their capital. But I think if you remember, what people were focusing on was these portfolio losses, and then what people weren't focusing on was the fact that they had in excess of 90% uninsured deposits, and that's what caused the run.
So would increasing capital requirements for Silicon Valley Bank or any of these other banks or all banks together, would that have stopped these banks from failing?
That's a hypothetical, unknowable question. I think it might have helped. I think it might have helped, but
how much then? Increasing it by how much would have helped?
It's very hard to say. Very hard to say. I mean, clearly the main issue there was a failure of management to follow up, a failure of supervision to require them to follow up, and really the liquidity regulation was just not appropriate. We needed to have stronger regulation around liquidity and uninsured deposits.
So last year you said the banking system is very strong, well capitalized, highly liquid, does a much better job of understanding the risks that it runs and managing them. And just today you said the banking sector seems to be strong. Do you still stand by those statements? I mean, just said it today.
Yes.
So, yep. Last month, Vice Chair Barr appeared before this committee and he agreed with you and said overall banks have a strong capital and liquidity. Secretary Yellen has said similar things. But today, even though you've all said that banks seem to have strong capital, you seem to lead us today by saying the bank's considering what increase would be appropriate of capital requirements. So has the board already decided that an increase will happen? They're just deciding what's the size of the increase for capital requirements?
No. What I meant to say, what I thought I said was that any increase above these levels would need to be shown to be justified.
So I understand, and you have a vote as whether or not what this proposal you'll vote on whether or not. Do you personally think that an increase is necessary at this time?
Do I think
that an increase in capital requirements is necessary at this time?
Look, I'm going to react to whatever the proposal turns out to be in the end and give it my best assessment. And also, that's what I'll say.
Okay. You just also said that credit is tightening. Won't increasing capital requirements further tighten credit?
Over time, I mean, the thing about capital requirements is if we put a proposal out this summer, let's say, it'll be quite a while before that proposal is, agreed among the agencies and then voted on, and then it'll take some years to come into full effect. So I would think, whereas interest rates, for example, have immediate effects on financial conditions and then reasonably quick effects on economic activity, capital requirements are a much more sort of medium-term, longer-term thing.
So I'd like to move on to what the impacts on lending, raising capital requirements would have. According to an academic literature by the Basel Committee on Banking Supervision, a 1% point increase in capital requirements could potentially reduce annual GDP by up to 16 basis points, showing that higher capital requirements come at a cost and could have significant impact on the U.S. economy. I discussed this with Vice Chair Barr last month, and expressed my concerns about what the impact of increased capital on the real economy, but he didn't answer the question directly. We're hearing from all sorts of industry that these increased capital requirements at any level would have a further tightening on lending. And if that happens, and I'm hearing from everybody, if that happens, it's going to be a real disaster. So I think anything that the committee proposes, if you could come back and brief us on before it's finalized, we would appreciate that very much.